The Fitch upgrade was no real surprise for investors, helping to push stocks north even before its announcement. Kamel Erdem is a hedge fund strategist and says while some stocks in the banking sector have risen 30 to 40% since the summer, foreign investors are still being very cautious.
There are still question marks in Turkey. Current account deficit, our inflation, the interest rates, all that stuff are being watched.
While terrific gains have been made to improve the country's economy over the last decade, domestic traders also still appear to be somewhat apprehensive.
We heard the upgrades, but Turks didn't believe it. We are seeing in Turkey something is changing. We are getting better life. Of course, there is no problem with that. But they didn't believe it because of the geopolitical area, the geography that we are in.
On one side, the ongoing war in Syria and the financial crisis plaguing Europe on the other leaves Turkey in a rather volatile position economically. External vulnerabilities, which could also affect the country's outstanding debts, are holding other rating agencies back.
A second investment-grade rating would give Turkey the credentials it needs for most international funds, as well as make it eligible to be included in more indexes, which could help attract anywhere from $2 and $2.5 billion US.
But that's a long time coming, according to some analysts.
Moody's cares both about the level of the current account deficit or GDP and the financing level. If the current account deficit is financed by short-term capitals, in case of a big volatility in the markets, the financial markets will be vulnerable to these shocks. So there should be long-term investments in a country to finance the current account deficit.
Turkey is working hard, having cut over $21 billion US of their current account deficit in just 1 year. Yet it is also external factors, which despite Turkey's best efforts diplomatically, are still weighing heavy on confidence. Natalie Carney, CCTV, Istanbul, Turkey.